The U.S. housing market in 2026 is no longer about just buying a house, it's about strategic financial positioning. With the shift in interest rates and the rise of new tech hubs, the rules of the game have changed. If you are looking to buy your first home or your 10th investment property, understanding the current landscape is crucial. 1. The 2026 mortgage reality. Gone are the days of unpredictable spikes. In 2026, we are seeing a stabilized pivot. For buyers, this means that while prices remain firm, financing options have become more creative. Programs like the FHA First Step and Community Reinvestment Grants are allowing buyers to enter the market with as little as 3% to 3.5% down, even in high-value areas. 2. High-yield destinations. Where to look. While everyone is obsessed with New York and Los Angeles, the real millionaire-maker cities in 2026 are the Sunbelt expansion. Cities in Texas and Florida continue to attract headquarters, keeping rental demand at an all-time high. The Rust Belt revival. Markets like Columbus, Ohio, and Indianapolis are offering the best cap rates for investors looking for cash flow over pure appreciation. 3. The rise of smart equity. In 2026, a property's value is heavily tied to its efficiency. Homes equipped with net zero energy technology and smart AI management systems are selling 15% faster than traditional homes. For an investor, this isn't just a trend, it's a way to lower holding costs and increase the resale value. 4. How to win in today's market. To succeed in the 2026 U.S. real estate market, you need 3 things: pre-approval clarity, don't shop for a house, shop for a loan first. Location arbitrage, buy in the path of progress where new infrastructure is being built. Long-term vision, real estate is a marathon. The get-rich-quick era of flipping is being replaced by the wealth-building era of long-term rentals.